Hey Scott, how's it going?
Yeah, it's actually wet
Hello.
here in San Diego today, but nice.
Yeah, yeah. It waited for me to move out of there because I love the rain. That's one of the reasons I left there. Never,
Yeah, I love
but
it too. It's been
yeah,
nice.
it is. It's fun, I don't know, especially when you
Makes you
get
want to
because
be inside,
uh,
staring at a computer.
San Diego, San Diego only averages about 5 or 6 inches a year. So when you do get it, man, it's kind of nice. Uh, well, guys, my normal partner Jamie Hodge is, or I should say, sidekick. I shouldn't say partner because Steve is a longtime partner of mine. And he's filling in for Jamie today. A little history on Steve and I. We started trading about 18 years ago with Dan Merkin, the CEO of Trade Ideas. Steve and I formed a partnership a little bit later in our trading career and started helping people navigate the markets. We started helping going over to China and working for about a year on a contract over there had about 450 traders with this company, and we would work over there and help them out. When we came back, we decided, hey, there's no reason why we can't continue to help them, and also to help other people. And we started a desktop sharing soft uh, business type model, and did that for about, oh gosh, four years. But anyway, we have a long history of working together, and I'm glad to have Steve in here. So without
Yep.
did you want to add something there, Steve?
No, no.
Okay, I thought you were
We just
getting ready to
no.
talk.
It's been a
Okay.
long time. No, we neglected to do the Ditto Trade account, which we also managed a mirrored account with mostly swing scalping and swing trading, where people signed up to a brokerage account and hooked up their account to ours. That technology has since come and gone, but it was really cool while it lasted, and we outperformed the market for our customers during that 3.5 year period. So that was kind of the last chapter of our partnership before joining up with Trade Ideas.
Very good. And the reason I brought that all up was to segue into Steve and I were such a good fit for Trade Ideas because we're both one of the very first users. Steve is like number 3, I'm like number 40 in the software. So it ended up being a pretty good marriage bringing us on, and we're happy, and we got some exciting stuff to show you today. But before we do, let's get on with our disclaimer. Just want everybody to know that this webinar is for educational purposes only. Anything you see in here today is not to be construed as investment advice, and if that's what you're seeking, seek somebody who is licensed to give you that type of advice. But we do plan on showing you some cool stuff, some cool alerts, and hopefully we can, instill some wisdom, a good trading wisdom in you today for you to take forward and profit in the marketplace. Now let's take a look at our agenda for today. We're going to start out with a market recap, as we always do. Glad to have Stephen here because he always has some nice insight into that. We're going to move into the Holly recap. I'm going to talk about something that any astute trader should have picked up on a couple of Holly's plays today, and that is the sector confirmation that we had in the 2 gold plays that Holly took today. And then I'd be remiss, I really need to talk more about this January effect. Steve and I, in our preparation for this webinar, we just both agreed that this theory is falling into place this year. It doesn't always happen, but we are seeing it, and first thing you're seeing it is in the gold plays, and I will talk more about that, how I'm kind of seeing it in the biotech. A lot of beaten up biotechs are starting to get a little bounce. Keep an eye on China because China was really kind of decimated on the Trump's victory, thinking Trump's going to ruin China, but I'm seeing a healthy bounce in the China sector as well. So, and then what we're going to do, I normally don't do this because I hate giving out price alerts heading into the weekend, but it's something I'm going to do this time around because I'm seeing some interesting setups off the January effect. And Steve will have probably a couple to add off the trend change lubricant factor or something else. So with that said, guys, let me minimize this and move on to the market recap. And let's pull up the good old ETF, the spiders here, and let's talk about what we're seeing here. Well, Guys, since we've broken out of this pattern, it's nothing has really changed. We're still in a very bullish tape. We saw the market, reach its pinnacle up here and try to pull back, went sideways a little bit. Looked like it was breaking down out of this level right there. And I got to turn my crosshairs on, so bear with me. But when the market took, there was a big red bar here the last day of the year, I believe, and it took out some major support right around this area. Then you had a couple of days of follow through, closing on lows. People were starting to say, okay, the buying's over. This is going to be the new year moving forward, a big sell-off like last year. And then, boy, you close near lows like that, and then you kind of gap and just take out the high, and now we're here moving forward and possibly flirting with a new high, not for the year, but taking out high of last year, which was obviously in December. I noticed even the Qs. Steve had mentioned just 2 days ago in the trade of the week. They looked like a big mess. Well, it's not so much a mess now. Here they are closing on a big, ugly red candle. Who would think of buying that? But lo and behold, we gap up, and now we're close to hitting a new high on the Qs. So, wow, and I can keep going. IWM, probably the least constructive today, had a little more sell-off than the rest of them. Diamonds, very healthy chart there, looked like once again. So it is, nothing's changed. I think what we could do is go back to the spiders here, and like we've done in the past where we've set these ranges, areas that you kind of got to keep an eye on, where we're well above all this area right now. So let's start drawing in some more levels to keep an eye out for if the market wants to break these levels. Okay, of course the top and the bottom there is really all we have to go with, because there's nothing really constructive in the middle here. So it's just, we're kind of in the middle of this range right now. So let's see what happens, because and then if we do break this lower level, you're going to have tons of support right around 220, which is kind of the breakout level that we had last year. When we broke out of this level, and I remember Steve saying, watch, we could back and field, and we did, came down, held, and then shot higher again. So that is still definitely going to be a level if we do happen to break through. And then you got this little bit of so it's just tons of support here. There doesn't seem to be any fear in this market whatsoever. Steve made a very good point. He saw a tweet by somebody the other day, and I think it would be very wise for us to give you something to look out for. And the tweet that he read to me was, correct me if I'm wrong, Steve, was it buy the election and sell the inauguration?
Yeah, somebody was coming up with buy the election, sell the inauguration. I thought that was kind of interesting, and that's kind of how the market does things sometimes. It really resonated, like that one might be one to remember.
Mm-hmm. Yeah, I like that. Anything, Steve, you want to add to what you're seeing here in the overall market, especially the spiders? Or
just that the IWM was really the only one that kind of fell on its face today. The spiders had a nice wick there. If you zoom in a little bit, just looking at today's candles, the IWM had the nicest looking chart for the last few weeks, of course, but today just didn't have it. It didn't have the end of day pop. Can you hear me? Yeah.
Okay.
Okay, yeah. So the end of day buying was much more vigorous in the S&P and in the Dow and some other things. So 3 out of 4 ain't bad in terms of how they closed today. They're still hanging in there.
Oh, sure, and I totally agree. I just think right now that we're right in the middle of this range, and let me cut this down. And we just I wish there was something more I could tell you about the possible scenarios here, but I think I pretty much laid them out. I said we're unless we break out to the upside of this range or come break this low right here, we're kind of back in no man's land. We could trade sideways for a while, and let's see what happens as we get closer to the 20th, right, Steve? The inauguration date. Maybe there's something to that.
Yeah.
And it could. that could really be an interesting scenario, because what you could have usually at the first of the year, you have new money that's coming to work, you have Christmas bonuses going back into the marketplace to be invested, in equities. You have new, hedge funds and mutual funds putting their yearly plan together and placing their bets, so to speak, and then possibly as you get to the middle part of the latter part of the month, that runs its course, and maybe you see some sellers come into the market. Time will tell, but I think that's an interesting thing to keep an eye out for, is that inauguration. All right, let's talk about. Let me pinch this in right here. Let's talk about Holly today. Holly opened the day. When I woke up this morning, I was surprised to see that we had no longs. Holly came in with looked like 8 strategies, if I believe, yeah, and I'm sorry, no shorts. They were all long strategies. So, it's a very bullish tape, and Holly does her number crunching as soon as the market closes, and does it well into the evening, and she comes up with these strategies, and what the data is showing her is, boy, I'm just not seeing a whole lot of short setups out there, and so this is all based on probability and tons of back testing and optimization, and then what she does, she releases what makes the cut, as she's taken through the combine the night before. And these ones that make the cut have to realize a certain amount of winning percentage and profit factor. So no shorts to play with today. So yeah, I was going like, oh boy, I hope we have a really bullish tape, because we have no shorts in our arsenal. So let's see what Holly did. Not a whole lot of trades today. I don't have the breakdown like Jamie has when I shoot it over to him, so I'm not going to be able to go into all the different number of trades and what she did, but I'm just going to break them down according to what I saw. And ironically, Steve and I, when we got together before doing this prep, we both had we both said the same thing. Okay, if you're as you become a better and better trader, okay, and as you get more experienced in being able to watch more things with your eyes, you're going to notice that you're not just looking at just 1 or 2 alerts, and really you only need to focus probably on about 2 or 3 alerts anyway, because you want to keep your eye on other things like, where is the money flowing? What sectors are strong today? What's the market doing? And if you came in today and you have some sort of sector analysis, if you don't, you should. This is the sector analysis that is found in our actually channel bar. If you go to sectors, I'll pull that over to show you guys what it looks like. It's in the channel bars. You go to sectors and you'll find this window in there. And then what you can do is save that to the cloud, and then you can pull this over to your, I'm not going to go through every step because I think most of you know how to do that, but you can pull this over to your default layout. And it's really, nice to have something like this in hand, because you can see, where the money's flowing. Back in the day when Steve and I started trading, we didn't have all these fancy alerts that we have now from Trade Ideas. It's amazing, the technology that's available to help guys profit and actually help them with their learning curve. It took me a year of losing money before I turned it around. I think and with these days, with all the tools that are available, especially with Trade Ideas, you can cut that time into 2 or 3 months. But one of the things we had to use is what's called a kind of a sector analysis, and we would look at this and watch and see which sectors were the strongest, and we would keep an eye on that throughout the day. And then we knew every stock in that sector, at least the 5 or 6, big major players, and whether it be oil, semis, and we were always trying to, find where is the money flowing, what's strong today, what's weak. And if you have this up and you're looking at this, you're going to see gold bugs, and gold has been pretty much on top. I'm going to show you later. 2 out of the last 3 days, it's been running away with the ones on top here. So if you have something like this, and you know that the gold is strong today, and you're watching Holly, and one of the first trades she spits out, well, actually it's the 5th trade, was RIC. Okay, it's a gold play. So you pull up RIC. I'm going to move this out of the way now. And let's take a look at 15-minute. Okay, RIC went off at 7:37 this morning. Okay, on a strategy called pullback. So not only do you have a very strong sector, you have a strong stock. You're buying it on a pullback. So what happens here on this bar right here? And let me just go to a 5-minute, so maybe you can even make it out better. There we go. So what you had a run up, had it run up here to 751, pulled back. Okay, Holly alerts you at on the pullback at 737, and then you had a nice move higher, pretty much throughout the day. Never really was painful at all. I mean, the most it went against you was 3 cents. I'm sorry, the low. Yeah, 3 cents, 2 cents. Take that back. So 2 cents risk right there, and then you just basically just kind of stair step, moved up all day, pretty much closed near high, and Holly took risk on profit risk off 23 cents. So she had a time stop. If you're watching this and you're watching the sector and watching the sector get stronger, in other words, if you're watching GLD. If you're watching, more importantly, GDX, you're seeing this was just a major move in the GDX. And if I'm going to actually show this on my chart later, but you can see major gap above the downtrend and go in GDX. So the point is, if Holly, even though Holly exited for 23 cents, maybe you want to stay in for an extra, there's no reason to get out. Everything's working in your favor. The sector's going in your favor. The GDX, gold stocks are moving in your favor, so maybe you want to hang on to that one. Same thing with SA. Right, 10 minutes later, SA, another gold play. And Holly called it, and the same strategy. Strong stock pulling back, so she bought it at this level right here. And I say she bought it. Remember, guys, she's not actually trading money. These are just, you have to treat these like an alert. And but she called it on a pullback there to 915, which corresponds right there. And once again, the most it went against her was 4 cents, and then we got the stair step higher. She did take risk off 21, so it only closed, risk on was only 4 cents higher, so she managed that one pretty well, and once again, it was a time stop. So, see, Steve, do you have anything to add to the gold?
Just know your
gold
sectors.
Yeah.
Just know your sectors. Know your players. Get a program. Know which ones are involved, because there's so much more involved in trading than just 4 symbols and a green bar to chase. There's looking left and looking at the bigger picture in the daily chart. There's trying to understand very quickly what sector this belongs into, and usually you can do that with a double click and look into your single stock window and find out pretty quick what sector this is involved in. So the more you can create to add to the layers of a reason to take a trade, the better. There's nobody out there that's taking every single trade Holly spits out. It's not what it's designed for. It's just another tool that has some statistically probable strategies behind it that came in with a nice hot hand of back testing last night. Tomorrow we'll have a different strategy as well. But as these things come out, we've got to be looking at the bigger picture, the daily chart. What's the market doing in general? What's the sector doing? It's a very good thing that Andy points out. You've got to know what the hot sector is. I try to look at that a few times in the first half hour of each morning.
Mm-hmm. Yes, I will show you that. Somebody's asking how to find the sector again. I will show you that a little bit later as if we have time. I don't want to take it off my screen because I'm afraid I may lose some data because I have to actually take it to another screen. So I'll do that at the end there for you. But and this, I want to show you another trade to the long side, one more trade on Holly, and then I'm going to talk a bit about this HPP, which ended up being Holly's biggest loser today. And explain to you why this is when you have to treat these like alert, and then put your trader's hat on, guys, and just ask yourself, do I really want to take this trade? So another one, same strategy, strong stock pulling back, SRNE. This, I thought, guys, was a no-brainer and a beautiful. Now look, let's look what happened here. She entered at 560. Let me go ahead and pull it up for you. Right there at 560, this is the 5-minute chart. Look over here, this is the daily. She stopped out at risk off profit for 2 cents on an exit reason. Once again, time stopped, which finds that hard to believe. I'm gonna have to look into that because I don't know why she would stop out so quickly, but because it doesn't look like that would be a time stop to me. So we'll have to look into that. But anyway, beautiful call nonetheless. Let's, follow the cursor here. Okay, you see it on the intraday. Now let's take a look at the daily. I'm always telling traders, look at the daily. That's the true picture. Charts have a tendency to fulfill their destinies, okay, when they break out of levels. So you had this one right here that kind of broke out of this level right here. You had a wick high right there, which corresponds to 2 closings. Okay, closing, and I'm sorry, that wasn't a closing, closed lower, but you see the bodies of that. Okay, so you had a level right there. It broke above that, and really there's no other resistance until you get to the 6. That's why it didn't stop here. You cannot call one little wick high. That's not major resistance. Now, when you get up to 6, you have a whole number. Not only do you have a whole number, which is a very psychological number where you're going to have sellers, but you have some resistance over here, just going across there. So I thought that was a really good opportunity, to hang on to a trade, even though Holly got out for 2 cents. If you look at the risk on profit, had you held it, pretty much all day, and I don't see any reason unless you're just, buying thousands of shares and want to pike it for 5 cents, why you would get out, because it never really broke down. If I look at the 15-minute chart, I'm sure it's even more clear that maybe you wanted to hold on to this one. And there you go. There's a 15-minute chart, and just pretty much all day long. That is what you call a trend, my friend. And I'm not even sure we have a 15-minute bar reversal in there. But anyway, a nice trade by Holly. Do you want to add something to that, Steve?
Yeah, I want to add. Can you add that 560 tag on the daily chart, right-click and do a horizontal orange line so people can see exactly what you're looking at on the bigger picture? All right, this is why you need to look at daily charts. That wick was a higher from about 3 weeks ago. That was basically where Holly triggered and started to move up. So blue skies, clear sailing, lack of resistance, those are the kind of things you want to see, not just the trade moving right back into congestion. There was a nice little resistance level that was cleared right at that 560 level, which was very apparent there on the daily chart.
Very good. Richard asked, will you be giving a webinar on backtesting? I'm glad you brought that up, Richard, because Steve, I think Steve and I have both, but I think Steve's done it more times. He's done it a couple of times where he's gone over backtesting, but it has been a while, so we will make sure that we get that added into one of our upcoming webinars, because I think we are about time. It's been a while since either one of us has done a segment on backtesting, so we will do something like that. I'll make a note of it.
We'll try and do that in the coming weeks.
Okay, now I want to bring out a trade, guys, because I don't want to come in here and just talk about the best trades. And there was another one in here, Pac D, that I'm not going to talk about, which was a nice looking trade. I will show you on the chart real quick, but I don't want to elaborate on it too much because once again, it was a nice trade and breaking out of kind of a level. If you draw the line here, let me just go ahead and put it in there because Steve is right. You kind of see the picture on the. And there you go. You had the yesterday's high, and then look at this wicks coming down here. So once again, that used to be support. Now it's resistance. It went right through there, and look, it had a destiny. It goes to $5. But I'm not going to spend now. I'm going to talk about HPP. Okay, this is off a strategy called Accelerator. It tested very well last night, but let's see why this didn't work today. So if you're looking at HPP, and remember when this alert went out, the market was pretty close to lows on the day. I think that actually the market went a little bit lower. But if you're looking at this daily, I'm just going to focus on the daily here because this is what you need to see. I mean, you're looking at a stock, okay, that I believe Holly called it out, and let's take a look. 35.75. So pretty much way up here, close to highs. It went a little bit higher, actually took out this high. So two schools of thought here. First one is I always tell somebody, I don't like buying breakouts when a stock has moved a long way in a short period of time. I am like Steve is the same way. We like to see a little consolidating, maybe backing and filling. Let the buyers and sellers battle it out for a while and move sideways. But when you
Yeah, that stock
come,
just ran 400.
basically,
That stock just ran a 400-meter race, and
yes,
then it got to the finish
yes,
line. It needs time to breathe and recuperate and get rid of the lactic acid and a couple of warm showers and warm meals, move sideways ideally, and develop some potential energy for another restart. But yeah, I say that all the time, and that just came to me, kind of like trying to make an analogy of a runner that's tired. Stocks get tired as well for many reasons. You've got your short-term traders in there that want to take short-term profits. You've got these people that saw it tick 1 penny above that level and then kind of reverse. So you probably had some short sellers maybe pile back in. So those are all the reasons for a stock wanting to take a breath. But if you just want to keep it in a simple analogy, it's like a runner. It just ran a nice, 200-meter race. It's got its hands on its hips and doesn't have the energy to push back through. It's got to regroup.
absolutely. Very good. When it went off, I see what the algo, the strategy the algo was looking at. Yeah, you did have huge volume coming in here. It's huge volume. You're about to take out a multi-month, if not, I don't know how far. I'm not going to go back, but obviously at least a year high. Everything looked good, except where did it come from? Not only did it have a big long bar for the day, it had, 3 out of its 4 last bars were pretty big green bars. So that one didn't work. If you want to, even if you do want to trade something like that, say you say the rule is, hey, it took a high, as soon as it fails, you have to get out. In other words, when it takes this high, you don't want it to mess around. You want it to go through that high and keep going, not go through and then, as I pull back up the 15-minute chart, come slamming right back down. You don't want to see that. You're out. It didn't work. You're done. So anyway, I wanted to point that out because I did want to show some things, and this kind of gives you an idea. Holly, as good as she is, you still have to trade them, and you still have to know when to take them and when not. And that was one. As soon as it went off, I said, "There's no way I would take that," and that's just me. I think every trader should, look at where stock has been and where it possibly may be going.
And I'll just say, we're talking about here and now in real time. If you guys are not in the live trading room, Barry also does a great job as to kind of explaining and walking through what his opinions are of some of these Holly trades when they pop up. So if you're not in the live trading room, you can be for free, and you can get some insight and some color as to what Barry thinks sometimes when these things come out based on the bigger picture, kind of what we're talking about here.
Yep. All right, guys, let's move on to the next topic, and let me pull back up the, and I'm going to try not to go back and forth because it drives me crazy when I have to do this. You know what, I'm just going to cheat over here and use this over here. All right, Steve and I got together over the weekend like we always do before it comes to for the trade of the week. Steve likes to pick my brain and pick some other guys' brains too, and we were talking about it. We were talking about January effect and what may be hot, at the start of the new year. And I tip my hat to Steve because he was one of the first ones to mention. He goes, that gold, he goes, I think gold. And I made a comment to him. I said, well, you're not making a stock play there. You're really making a macro play because, it's more. Anyway, I don't want to get too deep into it, but we kicked around and we talked about, the possible trade of the week. And I have to admit, he selected a good one. And but I want to get more into this January effect, okay, because this was the sector, this is the first day of the year. I just showed you that sector analysis that I brought over. Well, I took it back to 1-3, which was the first trading day of the year, and I want you to look at the gold sector. Okay, so tells you kind of if you're watching this, and even if you didn't take the trade of the week early, and you're watching this throughout the day, you should be looking for some gold plays because here's your first trading day, and you see money kind of flowing into to the gold sector. It's it's beating other sectors by a wide margin. it's not even real close. I guess telecom could be argued, but it's even twice as bad, as much as that. So that's one thing I kind of wanted to throw out. I am going to bring up another one, and here's that chart of the GDX. Okay, first trading day was right here. Nice move up, even after that ugly red bar at the end of 2016, and then we had kind of a hammer right at the trend line, and this is what you call a classic trend break, gap, and go, and that's what we had today. And so, if you were fortunate enough to participate in the trade of the week, I think you're probably already up about 12% right now. Am I not right? Am I right, Steve?
Yep.
Oh, good. Yeah, very good one. And I wanted to take a look at. I wanted to put the second day up there. So here's the second day. I've noticed some biotech, some beaten up biotechs. This is why the other day I recommended keep an eye on VRX. In the on the
January.
Thank you. January effect, because Steve and I noticed today that it actually made it onto the trend change lubricant factor today. So, and I'll show you that here in a minute too. So, and once again today, as I just pulled over and show you what you have on the top, you had gold again. So you're starting to see some things, develop here in the early goings of what can be happening into the in the January effect. And I kind of want to give you an eye. I did share with this alert with you the other day, guys, and I will show it to you again. This is the one, because I've actually made some changes to it. This is a top list that I developed to kind of help you in finding some stocks that may be potentially coming off a bottom. And I have it sorted by volume and 5 minutes, so you kind of look for stocks that have volume coming in. And not only making that pattern develop where they're bouncing off the lows. I'll just show it real quick. I won't spend a whole lot of time because I showed it to you, but I did make some changes into it. Position in your range, it needs to be a max of 15%. That means it cannot be no more than 15% off the lows of the year. Okay, I put my price, because what you want to look for is where big money is flowing into stocks. So I kind of wanted to stay away from the $2 ones, the dollar stocks, So I like to use $5, but I use $4.75 because $5 is a big level. So if they're getting close to that, I want to be notified. So I used $4.75. I raised the average daily volume. This is a 3-month average to 500,000, because if you have hedge fund money, mutual fund money, big money out there repositioning themselves into stocks,